Vision. My name is Simba Elijah Charles Kiage. This is your economic review this morning, and in the studio we are joined by Abraham Madago, the CEO Miradi Capital. Now, the International Monetary Fund has projected that Kenya's economy will only grow by 1% this year. This, as the IMF projected that the global economy will contract by 4.4% this year, warning of a long, uneven and uncertain recovery. This is an upward revision from an estimate of negative 4.9% made in June. Now, the IMF's projection assumes that social distancing due to the coronavirus pandemic will continue into 2021 and that local transmission will fall everywhere by the end of 2022. IMF's chief economist Gita Gopinath said in the latest World Economic Outlook that the revision was driven by better than expected growth in advanced economies and China during the second quarter of the year and the signs of a more rapid recovery in the third quarter. However, the IMF has warned that the coronavirus crisis is far from over. Now, the Central Bank of Kenya during its MPC meeting did indicate that the economy will grow by 3.5%, which represents a huge deviation from the 1% that IMF is painting. So the question this morning is, who is correct on our economic growth chances for the year, and what are the indicators from the biggest sectors like manufacturing and hospitality that the economy may rebound in the last quarter of this year? Now, the good thing is that this morning, as we speak, we do have the Q2 numbers from KNBS, and I'm going to go through them, Abraham, just before we talk about this. Now, what we do know is that in quarter two, our economy contracted by a whopping 5.7%. Now let's talk about the biggest sectors, as we do know of it. Tourism and hospitality sector, which has been the biggest contributor to our GDP, contracted by a whopping negative 83%. Let's talk about manufacturing, 3.9%. Transport, 11.6%. Now, the thing is, though, Abraham, the biggest contraction we've ever seen was in 2008. But even then, we were able to grow by 3.2%. That's a general economic growth for that year. So I'm asking you this morning, who do we go with? IMF or the CBK?
You see, whenever you're doing projections, and that's why those numbers will vary by as many people as they're projecting.
Yes.
You're using certain metrics. Everybody is trying to look forward and see how it looks. Unfortunately for all of us, none of us has ever seen anything similar to this. That's why you see we started very high, 6, we went to 5, now CBK is at 3.5, IMF is at 1. You remember when you sat here that day I told you, I don't think we can go beyond 1.
Yes.
So slowly we are getting there. But you see, people are using different metrics. And we cannot say any of them is wrong, because nobody has the right answer. Because we are all just trying to project what we think will happen.
Yes.
Coronavirus is a big unknown. People said it would come and decimate Africa. It did not. People said it would go away in Europe, and now it's coming back. So really, we are dealing with a big unknown. And we are still on the pathological part of it. So once that is done, then the economic effect. That's why you're talking about 2022. Because the aftershocks will be with us for a long time. Personally, I think it is too early to do estimates. These estimates mean nothing, with due respect to IMF and Central Bank.
Yes.
They mean nothing in this sense, in the sense that just a change in one of the metrics now completely obliterates whatever they've done. And furthermore, you see, when these numbers are being done, they don't get into the details of how they arrived at those numbers.
Yes.
Because it's only if they do that, then we can compare likes to like. But now we're comparing two numbers that have been calculated using different methods.
Yes.
And different assumptions. So literally, they're not comparable. And see, that's the problem. That's the limitation of statistics. Statistics will, as I say, if you torture data long enough, it confesses.
Yes.
So it's a question of what are we torturing that data to tell us? So they tortured it, he told them 3.5. DCBK tortured their data. IMF tortured their data, he told them 1%. So clearly, the data sets are different.
Yes.
So what is for sure is that we are in the middle of a pandemic. A pandemic we have never been in, and a pandemic who we don't know when we are getting out. Those are the things that we know. So people are just trying to estimate when it will end, how it will end, how we will live with it. Those are the estimates we are dealing with here. But they are all estimates, and we are all doing this while this is going on. So to cut a long story short, what is for sure our economy will contract. So what we're arguing about is it is by how much.
Yes.
Personally, if I was told now you also have to give an estimate, it will not go beyond 1. That is my take.
Pretty much.
I know that I've gone with the IMF, but that has been my position all along. Because if you look at the key drivers, especially something like tourism, tourism, the multiply, it is a very good dipstick of an economy.
Yes.
Because especially ours.
Yes.
So you find that if it is doing badly, it has a very big effect even on the agricultural sector. Because they say for every direct job in tourism, there are probably around 11 to 12 others along the chain. So when that sector is doing badly, it really affects the economy.
Yes.
Even if you look at our agriculture, yes, countries we were exporting to, we're having challenges. We're having challenges with logistics. So definitely the economy is going to shrink. By how much? I think let's wait a bit longer before we make that call.
Pretty much. And I want to take you back to exactly what IMF, it has been very critical in some of the measures that we've taken during this coronavirus pandemic. In fact, the first ones were saying, I mean, if you continue now sort of saying, well, we're going to extend tax reprieves to the economy, which we do not have been extended all the way to 2021, fine. Some of them have now been extended all the way to December. They're saying, I think it's high time you remove that as you go on relaxing the curfew and also relaxing some of these unprecedented measures, then it's also time for you to stamp out some of these measures that you've actually put in place. Abraham, they seem to be right though, aren't they, with where our economy stands? But can I ask you though,
Yes.
because we've seen the same thing from Treasury, they're saying, well, we'll never default, we have never defaulted. CBK coming in and saying, if you look at our exports so far, and you look at even where an inflation numbers have been, we are still within check. So why do you think CBK is becoming bullish form? I mean, 3.5 is a bigger number because even after 2008, we only grew by 3.2%, Abraham.
I think they are coming from the fact that our exports, once the logistics is fully back, especially the cargo, we will be able to export, especially
Yes.
agricultural products,
Yes.
in full. So we should have no problem there. But if you come backwards, if you look at how CBK is looking at our economy,
Yes.
they're trying to play a scenario of how soon can we get back to where we are supposed to be. And for us to kick back, we just need our agriculture exporting whatever it is that we grow here.
Yes.
Our tea going out, our coffee going out, our avocado going out, because there's a very high demand out there for the food right now.
Yes.
Don't forget we are about to go into winter where they can't grow anything wherever you export our food.
Yes.
But now, coming back to why are they so bold about what we are doing, and should we relax our tax measures? I don't agree with IMF on that one. I think right now, this is the time when you're supposed to give breaks to spur the economy, because there's no other way.
Yes.
Because you have to forgo income now for future growth. Because if you tax now, you kill. So the thing is, as we are growing, let's be very careful of removing our tax breaks too early. And with due respect to IMF, I have nothing wrong with the IMF, but IMF also, they have their limitations of knowledge. I mean, you cannot be an expert of the whole world.
Yes.
Yes, so CBK would be a better expert of Kenya than IMF, with due respect. So sometimes it's good to look at, and again, there are measures that look good on textbook. There are measures that look good from a global perspective. But domesticating it, that policy may not work as is. It has to come here and we domesticate it. Those measures they are saying may be good, but with a pinch of salt.
Yes.
So it's, yes, you are saying this, but give it to us. How we plug it in is our problem. But we cannot plug it in the way you're giving it to us.
Yes.
Because sometimes that will end up giving you economic constipation.
Pretty much. Now, Abraham, let me just address this issue as we clear this conversation this morning. If you look at where we are, quarter two, we've contracted by negative 5.7%. And I will tell you though, even our biggest contributors in terms of manufacturing and tourism, if you look at tourism, we had negative 83.3 from quarter two. Well, CPK also did say the other day that if you look at exactly the hotel industry as well, they have been recording a bit of increases because of employment has jumped from 37% to 45%. Do you think that, well, with the relaxation of the curfew and the extension of measures that the economy is working with right now, do you think that's too good a period now as we close this year for us to come and say, well, we did rebound. And how quick can this rebound be, Abraham, even now when it's still within the curfew, when we're still not really at liberty to run the economy the way we used to run it?
See, we have to separate two things. Freedom to transact business and ability to transact business.
Yes.
Those are two different things.
Yes.
We have now been given leeway to transact business.
Okay.
We have been given leeway to be in a bar until 10 or 11, to be in a restaurant until 10, to move around the country. But have we addressed the issue of why there's low demand? Because you can allow me to go to a pub, but if I don't have the money, you can allow me all you want. I will not be able to consume that,
yes,
whatever it is that I give it. So we've addressed the freedom issue. Now let's address how we put money in people's pocket. Because only then do we spur the economy. Because economy is spurred by cash and spending, and ability to spend, and the want to spend. Because also there's a feeling in the economy that the money I have, I don't know where we are going, let me not spend it.
Yes.
So there's also that in the economy. So there are a lot of mechanics. So opening the economy is not the magic bullet. It just creates the environment. But putting money in people's pocket, changing the psyche of people and assuring them that all is well, so that they can start spending. Because people right now, if you look carefully, people are only spending money that they must.
Yes.
The rest of it, they're stashing it. You remember even when CBK was looking at, they were saying, I think that there's actually more money outside banks than there is bank if you look at money supply. So people are stashing money everywhere. Why? Because when people feel that they're endangered, the only safety they have is cash in pocket. Not even cash in bank, cash in your pocket. So in terms of are we rebounding or not rebounding, the ultimate will be how much money have we been able to put in people's pocket. Creating employment is one of them. Getting people back to jobs is something. But using whatever other measures, be it fiscal or monetary policies, to make sure that more money, by either putting it there or not removing it by taxes and everything, so that when you give breaks, people retain more money than they would have if they had to pay out taxes.
Pretty much. Yeah. All right, let's move on to another issue this morning. Now, Kenya Power, which has been in a tussle with the Energy and Petroleum Regulatory Authority, EPRA, over delayed revision of electricity tariffs, says a separate entity needs to be established to oversee signing of power deals which have overburdened it due to excess supply, which has to be paid for. Now, in a story carried by Business Daily, the energy provider blamed the regulator on its failure to take away its burden of excess supply in the economy, something that the Kenya Power says it pays for, leading to ballooned operating costs for the regulator, which also blaming it EPRA's approach in addressing the challenge of excess supply through delayed project commercialization dates for the already signed PPAs. Now, the confidential letter to the Ministry of Energy seen by the Daily read, and I quote, clearly, a different model is required that would deliver revenues for these projects at the same time reduce retail tariffs as per the government policy. One option is to create a separate entity dedicated to entering into PPAs with the generators on behalf of the government. Question being this morning, is the Kenya Power trying to have its way in adjusting its power energy prices in the country? And I don't know, Richie, whether we have that data that shows the financial position of Kenya Power. Pretty much that's exactly where we are, which shows you what the weaknesses of Kenya Power are in terms of really addressing some of their profitability issues in the country right now as we know of it. Now, let's look at exactly where we are this morning. In terms of current ratio, from 2016 to 2017 to 2018, you can actually see how that is diminishing. Also, debt to equity ratio, which is really something that you have to look at. It keeps on increasing. From 2016, you see exactly where it was 1, then went to 4, and now it's pretty much stuck at 4, which if you go back to 2019 and 2020, it's really jumping up because they did record their worst year in terms of their profitability in 2020 half-year results. Good. Abraham, is it Kenya Power trying to find a way to price their services? Because we do know that has been the biggest issue. In fact, even in their turnaround strategy, they really wanted to revise their power tariffs.
I've seen those financials.
Yes.
Quick ratio, current ratio, debt ratio. The current and quick ratio. The quick ratio, the difference between quick ratio and current ratio is that the quick ratio is calculated only using cash.
Yes.
As the current asset over the current liabilities. You can see they're all below 1.
Yes.
The current assets, where it's current liabilities over current assets over current liabilities, is also below 1. What does that mean? It means that that company is insolvent. Plain and simple. It's not a going concern. That is what those numbers mean. Then if you go to the debt ratio, you can see the debt ratio goes up to 0.8. It means they are on the verge of borrowing the equivalent of their capital. Because debt ratio is the borrowing over your net tangible assets.
Yes.
Or your equity. So it means, number one, they're highly geared and they're insolvent. That is one thing. Now, that is the financial position we are talking from.
Yes.
So with this kind of position, it means even they're not generating enough cash. That's why the quick ratio is below 1. Because the quick ratio should be above 1, which means that you're able to pay all your creditors even if they all walked through the front door at the same time. Now, they're talking about creating another entity to do what EPRA does. My question is, how will that solve the problem? How will that solve this problem? It will not. We can change those organizations daily if they like, but it will not change that position. Because the problem they are in is that when the PPAs were getting signed, they were signed on a certain basis. But the truth of the matter is, where we are now, we've signed PPAs, or rather, the installed capacity. The signed PPAs are probably more, but the installed capacity now is about 3,000 megawatts. Peak demand is about 1,800. So Kenya Power is paying for 1,200 megawatts, which they have no one to sell to.
Yes. But
I can assure you, even without being private to those details, that when those things were being signed, they were signed on a basis that the demand for that power will grow as that supply is being put in place. Don't forget, the PPA process, to get a PPA, the process is very long. You apply to the ministry. When they're happy with you, with all your feasibility studies and everything, and once the EOI is okay and the feasibility study is okay, they send it to EPRA. EPRA, you go have a conversation with them. Then they send it to Kenya Power. You start doing conversation with them. Then they bounce you back to EPRA. So it's very consultative. It's extremely consultative. So I don't think it's fair for Kenya Power to now come and say it is somebody else's fault.
Yes.
They were in the picture throughout.
Yes.
Lastly, even if we did what? PPAs are contracts, and they are long-term contracts. And they are long-term contracts that have obligations on both parties. Obligations of that if I produce up to the amount we've said here, you pay me. If I don't produce, I pay you.
Yes.
So it means whether you're using the power or not, if I produce it, you pay for it. And we are stuck with something, a document of that nature, for a 25-year period. So whether we have EPRA, whether we have another monster, whether we have another parastatal, whether we have another organization, it will not change that fact.
Yes.
That can only be changed if the other party is willing to renegotiate. But the question is, why would they want to renegotiate? Because they invested based on the tariff that they were given that time, for the period they were given, with the escalation factors that they were given.
Yes.
So Kenya Powers have nothing to do with the organization with EPRA. It has everything to do with how they run that business. Because my question is, why would you not be making money in a market where you're on your own? How is that possible? It is only possible if the way you're running that business is not optimal. You know, you're running the business in a way that is not making you money. It has nothing to do with your clientele. The clientele is out there, people out there who have no power. You know, I have my relatives up country who have no power and who desire power.
Yes.
Who beg for power. So the issue is, it has nothing to do with EPRA. And even if you change EPRA and put anybody else, it will not change their contractual obligations. It will not cure this financial position. All those things will be cured the day we say, you know what, our problem comes from this contract that we have. So let's first liaise with the rest of government to grow demand, first of all, to consume this demand. Because that capacity is there, it's not going anywhere, and you're paying for it while you're at it. So first of all, let's talk with the Ministry of Industrialization and other key ministries to bring in, and even KRA if need be, to lower certain thresholds of tax, to allow big consumers of power, like steel guys who do steel, and those guys who use heavy power, first of all, to come and consume that. In fact, I would rather we have a situation where demand is ahead of supply, because that one will cure this kind of, because if that 1,200 megawatt is taken up, those numbers will change.
Yes.
Instantly.
Yes.
But having a PRA or somebody else, it will not cure. So for me, in a nutshell, I think we are shooting in the wrong direction. I think it's high time we came out of the denial we are in. Then, numbers don't lie. When you look at those numbers, I've just glanced at them and
Yes.
I can tell you,
Yes.
These are very green picture. And this is up to 18, so I don't know how 19 looks like. I think it's just worse. So probably by the time you get to 2020, probably the debt to equity ratio, it maybe is 1. And the current and quick ratios have declined further. So even as a going concern, there's a problem. Because even as an auditor, that means you have to qualify those accounts. Because you're saying you're not sure that this company will be going on for 12 months. Remembering that these are quoted on the stock exchange. So even the public, that's why they keep giving the cautionary statements they keep giving. Because it is a requirement. To tell
Yes.
people, that we could go belly up anytime.
Pretty much. Let's talk about another state agency quickly, that Abraham, before we step out of the studio therefore. Now let's talk about NOC, yes, which is our next issue also this morning on our economic review, which is also, as we do know, have been in problems now. The news, the National Oil Corporation, NOC, may be in trouble as its debt, including defaulted loans, now stands at 5.3 billion, comes as no shock for the state-owned agency. Now, NOC's current provisional loss for the year, June 2020, almost quadrupled to 1.3 billion from just 300 million the previous year. Now, shareholder equity has diluted by 1.34 billion to a mere 28 million in the year, and owes suppliers 628 million shillings. Now, Kenya Commercial Bank already threatened NOC to clear its outstanding loans for the tune of 3.8 billion back in August or start its recovery measures. Now, NOC already owes 5.2 billion to banks in the country, a factor that the current CEO, Gideon Leparan, calls a real threat to the survival of the company. My question this morning is this: how does NOC make losses in a sector where demand never dips, Abraham? I mean, it's interesting because we're just coming from Kenya Power, but we're saying, how do you make losses in an area that you are the monopoly? Let's cross over to NOC, which is another state agency. They're making losses in a sector where demand will never dip. It's always up there.
See, if you read the mandate of NOC,
yes,
they were formed, I think, in 81. They were to do everything oil. Mm-hmm. But if you see, but now if you look at them very carefully,
yes,
and even they came even before we had the energy regulator. That time it was ERC.
Yes,
and one of the objectives of NOC was to have a petrol station network.
Yes.
That would sell fuel at a price that would be lower than the market, as a way of showing the market which way to go.
Yes.
Now, fast forward today, we have EPRA in place, we have very big players in place, the Shells, the Rubies, and the rest. I personally think the reason they are losing money this way is because they're playing in all the sectors. They're in the upstream, midstream, and downstream. I think their space is in upstream and midstream. They should forget about downstream. I think they have no business having petrol stations. I think I'll say this very, very bluntly. Because they're not making money there. I think they're losing money there.
Yes. And
why should government be in fuel retail price? Because the reason why they started that has already been overtaken because EPRA is in place now. Previously they were showing direction. This one now dictates direction, dictates the cost of how much fuel will cost. So I think, first of all, me, if I were them, I would do away with it completely. Sell those off, the NOCs, or all this, and get some cash. Because you can see they're struggling for cash. They're not paying the creditors, they're not paying. So the creditors include their banks. That's why banks don't sell. But even, I feel for KCB, even if you auction, you'll sell it to, you'll sell what to who. So I think for strategically, I think they should think back and just hive off their downstream, especially their petrol stations, anything to do with retail.
Yes.
And put their resources in upstream through JVs, because they own all the blocks, most of the blocks in Kenya. So let them do JVs and concentrate on upstream.
Yes.
Because that's the only way we make money. But the way they're doing it now, they're spreading too much of their money on a side of business they cannot compete. They cannot compete with the Shells and the Rubies because those guys are in that business and they're big. But given that the government entity, they can make a lot of money and be a lot of relevance. Because
Yes.
at the end of the day, for a government institution, apart from making money, is delivering a certain mandate.
Yes.
You want Kenya to be an oil exporting country. They should drive that desire, that mandate more, and forget about this retail business. Sell it off.
Yes.
Yeah, I mean, if today they put on offer, it will be snapped up tomorrow.
Abraham, we spoke yesterday, though, just in 1 minute, because I
Yes.
think we only have that time. We spoke yesterday that, because how did we get here? And it's something that you and I spoke yesterday about, how most state-run agencies, and you can actually see all the way from a sugar milling companies in the country up to where we are now with NOC, is that in some way, even if it's poised to make profits, even if it's poised to work alone in a certain industry or sector, you're still finding, well, they are struggling. Case in point, NOC. Do you sense some mismanagement freely in these state-owned companies?
Okay, to me, mismanagement is not a big factor. The biggest factor is when you don't keep reviewing your mandate.
Yes.
It's like if you're cooking food, you have to know exactly when to take it off the fire, because it starts from being raw. It's made. If you keep it fire, it's overcooked, and before long it is charred. So this is a situation whereby they started their business, especially on downstream on the petrol stations, to regulate the price by being a player in the market. But they've overstayed that space, not checking that EPRA is in the house. The reason we were put in place has expired. So you are doing something out of time. That's why this happens.
Yes.
So it is a question of refreshing your mandate and keep putting a dipstick to ensure that you're still relevant in what you're doing. Otherwise, you'll overstay, and then you'll overstay your welcome, and then this will happen.
Pretty much.
Yeah.
Abraham, thank you very much for coming by this morning. It was a pleasure to speak to you, sir.
Most welcome.
All right, now that's exactly what we'll have for you on our economic review this morning. We take a short break. Once we come back, let's talk about local fashion. Who's it for? And does the government's plan to ban the importation of mitumba going to prop up the local fashion industry? Once we come back here on Metropole Television.